I will start off by also thanking Charles, thanking Thomas, thanking Christine. It's an honor to be included. And as was introduced, I think they saved me for last so that I could talk about the private sector version of this. I also start by kind of explaining the basics of what Ripple is and what Ripple is not. Ripple is a private company. We're based in California, about 300 or 400 employees around the world. And we're trying to solve a problem. We're selling technologies to banks and financial institutions to solve a cross-border payments problem. You want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe I should take what the IMF is going to do. I think we stunned Ross into silence with that one.
For that to happen, okay, under the current legal framework, some country would have to use a crypto asset as its currency.
I don't know how we can say none of that exists in the crypto world. Every Ripple transaction is going through a regulated endpoint to a regulated endpoint. There are no transactions that are not KYC. There's no transactions that aren't monitored for AML. So, I mean, look, I actually think using digital assets, and I had the governor of a large central bank in Southeast Asia say to me, if customers were using XRapid, which is Ripple's XRP liquidity, it actually reduces systemic risk to a country, a small economy. Let me explain briefly what that means. Today, in order to, if you're a bank in fill-in-blank country, you pre-fund accounts around the world. If you're a small economy and you're pre-funding billions of whatever the local currency is into other accounts, you actually are losing control over those. And when there are currency runs, when there are challenges for local economies, that creates risk, increases the risk systemically. So if you didn't have to pre-fund, but this is an observation that I didn't make, this is an observation that a central banker made to me, that if all of the banks in this particular country used XRapid, the systemic risk would actually go down because they'd have more sovereign control over their own currency. To be clear, we have not focused on the central bank digital currency issuance. Our view is very much there needs to be interoperability globally. And even in a world of CBDCs, you still need interoperability to solve that problem. Also, before I dive in, my comments are more focused on kind of explaining how Ripple's approaching this problem as opposed to just CBDCs. But I thought it worth spending a moment on how we think about blockchain at large and why it is such an interesting technology and I think appropriate for central banks and commercial banks to be looking at. For me, the novelty of any blockchain technology is the ability for two parties to transact without trust, but with certainty. So today, anytime we transact, we are transacting through a central counterparty, whether that be a correspondent bank where Ripple is focused, or that be a Visa or American Express, what have you. The opportunity around blockchains is to change that dynamic, and I think many industries, whether it's payments, what we're talking about today, or securities, or even loans, any of those transactions, I think, can be disrupted and made more efficient through blockchain technologies. Cities like New York, I think, are trying to call out. Cities like Miami are calling out that problem. Even today, for those of you who haven't read the news, Gavin Newsom issued an executive order for the state of California calling out the fact that there's not regulatory clarity and really championing the need, because about a quarter of the US blockchain companies are based here in California, the need for that clarity. Now, that's one state, and Mayor Adams represents one city. These are federal, the federal level. And a lot of countries around the world, some represented here at the Milken event, are way ahead of where the US is, and that is a problem.
So, I think it's very clear that the SEC, instead of doing the hard work to define a new set of clear rules, a new set of clear regulations, both from the SEC and really the US government in general, they've instead decided, hey, we're going to do enforcement we're doing regulation through enforcement, which is not efficient and really has, I think, stifled innovation in the United States.
All right, so with that kind of brief introduction, I'll be brief on some of my comments here because we've touched on this already. I think we would largely have few arguments with the idea that global payments today have not caught up with the age of the internet. We talk about slow. We've talked about the 14 days that Norman mentioned. The younger generations today are accustomed to be able to open up their smartphone and click on a button and have an ice cream delivered in 20 minutes. They aren't going to be very happy when it takes their payments, days and lots of costs to get to them. Another thing that is, I think, often lost upon us is the opaqueness in the problems with which correspondent banking currently operates. There's a 6% error rate self-published that 6% of all SWIFT transactions require human intervention. Now, that doesn't mean they don't get there. It just means that human intervention adds time, it adds cost, and what have you. And lastly, when we talk about cost, it isn't just about transaction fees. It's also about the pre-funding required for commercial banks and even large corporations and the cost of that capital. What's amazing to me is that these costs are often borne or burdened the populations that are least able to afford them.
I do think I'll start there, really. I think it is a victory not just for Ripple, the company, but also the whole crypto industry, because the SEC, I think, has consistently tried to take point and really expand their reach and their control over the crypto industry. We've seen that not just with Ripple, but in other cases. And to have the executive order, as Sonali was talking about, the executive order came out and really said to all agencies, hey, we need to be coordinated. If we want the United States to be competitive in this key technology platform, we need to not have one group behaving one way and another group behaving another way. So we're really pleased by not just the court's decision, but also in the executive order that came out last week.
Well, I think the SWIFT model. We can talk about open APIs. We can talk about open networks, but it isn't. I mean, SWIFT is it's a SWIFT-controlled API, and even I'm complimentary of what GPI has represented in terms of accelerating what has been a relatively slow process. GPI, I think, is a big step forward, but it's still there's a central database where you're querying a transaction status, and so that's a central operator. I think Gottfried said, and I agree with, decentralized systems, I think over time, as we've seen with things like TCP/IP, are likely to win, and I think that today is not what SWIFT is. And when we think about how to enable a transaction from a Barclays account to an M-Pesa wallet, mobile wallet, that when we think about an internet of value, it's not just about the banks, for sure. Yes, it's about regulated institutions, and we're certainly not trying to circumvent those things. But I think it's fundamentally kind of a different view of how the world may play out.
Look, I think there's no question that the United States Securities and Exchange Commission has reduced the competitiveness of this critical industry in the United States. I think they've been out of step, not just with other parts of the US government, but they've been out of step with other major economies around the world. The only country in the world that considers XRP, the digital asset that Ripple uses in our technology stack, the only country in the world that thinks XRP could be a security is the United States. We work successfully in the UK, in Switzerland, in Japan, in the UAE, in Singapore. All of these countries have acknowledged XRP as a currency because that's how it's used. So I think the way the US, if we want the US to be a leader in this new, growing, critical, innovative industry, like the internet 20 years ago, we need that regulatory clarity. And the SEC is really just coming out and saying that we're going to file lawsuits, enforcement. We're not going to provide clear rules so that people know how to operate as other countries have done.
I hear people talk about volatility, and I feel like they're propagating misinformation. The volatility risk of fiat, volatility is just a mathematical calculation of time times volatility. If you hold fiat for, let's say, an average SWIFT transaction today is in the order of magnitude 2 days, that's about 180,000 seconds. An XRP transaction is 3 seconds. So if you take a low volatile asset times a long duration, fiat, or a high volatility asset versus a very, very short amount of time, it turns out mathematically there's less volatility risk in an XRP transaction than there is in a fiat transaction. The difference is you have market makers. When you do a SWIFT transaction, there's banks saying, there's a market maker saying, I'll lock in that rate. I'll take the volatility risk for the next 2 or 3 days. With XRP, you don't have to do that because it settles so quickly.